Hello, good afternoon. Welcome to the day 44 of this 60-day rule-based trading challenge. And today was a challenging day, and we were happy to close the day with the flat P&L. We took the two trades today, and then the first trade, hit the stop loss, and then there was a stop and reverse opportunity, and then the stop and reverse opportunity, we were able to cover the loss of the first trade, and hence. And as you know, the second trade is always for us to just to close the, or rather cover the first trade loss and end the day in the flat. That and we were able to ensure that in the second trade. From an intraday perspective, obviously today was a bit of a challenging day. Once you see the chart, you will understand the same. From a positional trader, this may not be a significant day because there's nothing much in terms of a variations in terms of the opening and closing. But from an intraday perspective, as you see the chart, then you'll understand how much of the variations one has to faced for the day. So let me walk you through the quickly the trades for the day. So the first trade was our, we started the day with selling the 25,000 call because, and also the trade came only at 10 o'clock because there was a confusing movement happened till that time. And then it came down and then it started going up. And then here it started coming down. And then we thought it is, it came down and then it recovered here, as you see. And then this is where we felt it is a, it came down and then it was looking like a bearish day. And as you see here, the moment we took the trade, it remained in the kind of a favorable trade for either it was little below the our entry price or at the level of entry price. And suddenly there's a big spike happened at the 11 o'clock candle. And then if you look at the here 11 o'clock candle, it was almost triggering our ORB, opening range breakout kind of a thing, but it did not happen. So we did not exit on this candle, and then we were waiting for the next candle to close above this. But by then the premium of this hit the stop loss. So as we put the 50% of the entry price, that is 123 we had entered. So 184 was 184.6 was our entry stop loss, and it got triggered over here in this candle, and we had to exit. And once we exited this trade, we were it is generally a stop and reverse kind of a scenario which we follow. And then we just looked at the option chart, and this was our entry candle for the day. And then the wicks had fallen from there, but it was still showing the symptoms of the going up. That this candle was giving a reference to that it is still likely to go up. And then anyway the level at which here also was not a low level, it was in the excess of 18. Above 18 is still option buying scenario. Actually here also option buying we could have done, but as per our strategy rule, for our first trade is always generally the selling trade, so that is how we entered into a selling trade. But here it gave an opportunity based on the high level of the VIX, which confirmed to us that we could enter the stop and reverse trade. And that is how the second trade got triggered. Based on this, like at 11:05 this got exited. As you see the order history, like if you'll see here, at 10 o'clock we entered this trade, and then 11:05 it got exited. And we then, of course, there are some more other entries. You may wonder what it is, but they are different trades, as you say, they are from a different strategy, because again, it is a normal order, whereas here we are talking about the MIS order, and so there's no confusion about it. So 24,900 is the next trade. At 11:05, it got exited, and by the time we could analyze the VIX chart and the premium chart, we were to decide the premium. So we took couple of minutes. So at 11:08, we entered the buy trade of 24,900 at 185 rupees, and then we had exactly put the exit at the break-even level. So the 251 rupees was our exit level. So so that exit order got executed at 11:24 a.m. So if you look at the 24,900 chart, so this is where we took the entry. And we had obviously started with a 40% stop loss for the second trade, and we did not hit the stop loss any because it was continuously going up. And then, as you see here on this candle, this is at 11:24 a.m. So we exited. It went further up after that, but that is not our lookout, because as I always say, our second trade is only for recovering the our trading cost, or meaning trading loss of the first trade and the trading cost put together. So as you see here in the both put together for the day, we just ensured a 56 rupees is the positive close for the day, which is nothing but a flat closure for the day. Uh, the first trade, as you see here, 24,500 call, which we shorted, and then at 123.05, and then we closed it at 185.60. 66 rupees is our trading cost, and we incurred a massive loss of 4,757 rupees. And normally we don't prefer this kind of a high premium to sell. But because the VIX was above 18, there was no point in going too much out of the money. This itself was a zero point 0.3 delta premium which we had sold, so 123 rupees. So that is why our risk was little higher for the day. So 4,757. Not we would not have preferred, but we yes today because of the VIX being high, we took this call. We took this trade, and we incurred a loss of 4,757. And our next trade was this was a in the money or at the money, close to at the money kind of a thing, which we have take or the even at certain point of time we take the in the money, because it's a buying strategy. We cannot go OTM, and we should not go OTM rather. So here we entered that 185 rupees 75 paise, and then we had put a target order. So 251 rupees it got executed, and we incurred a trading cost of 80 rupees. So we could recover the first trade loss, and also the trading costs of both the trades. So that is how both put together we are able to recover about a 56 rupees. So if I look at the RP&L, yesterday we were at 15%, and now just 0.02% we could add today. So which making it 15.02. And again, looking at the equity curve, we took the first trade, made us to further, as it is yesterday we had incurred a loss, and then further one more loss which made us to dip. The equity curve got a deep dip, and then the second trade which helped us to recover to the first trade's loss. So we came back to the almost to the yesterday's level. So if you look at the VIX after that again it started cooling down, and then the if you look at this second trade also, it went peak and then it started dropping here, and then that is because as you see here, what is interesting is the Nifty, the way it behaved today. It gapped down, and then it took a deep dip, and then it recovered to so much to the extent that it went above the the opening level. So that means it came into the positive zone, and again it went into a deep day low. It made at around 220, and again it recovered, and it was from a this is what I was saying, from an intraday perspective it was definitely not an easy day. But if you look at the overall, people would say, okay, it was a negative anyway. Day opened in a negative territory, and then point 0.7 it closed. So from a daily chart or a day positional trading, it did not made any bigger impact. So from an intraday perspective, it was a different ball game altogether. And that's it for the day. So we will be seeing you tomorrow for the 45th day of the this trading challenge. Thanks for your continued support. See you. Bye bye. Take care. Have a great day.